All right, good morning, traders, and welcome to the opening bell. Today is Wednesday, April 22nd, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start the day off with you. It is a quiet morning. Overnight, we did get President Trump extending the ceasefire for an indefinite time period while he gives the Iranian leadership time to, quote-unquote, come up with a unified response to some of the demands made. So it seems like we're in limbo with regards to at least the war as it stands right now, but markets are taking it in stride. Equity markets are poised to open higher on the session. The US dollar getting a little bit of a lift here, oil trading right at resistance, but all the majors remain in key levels. Okay, and we're continuing to hold a very tight weekly opening range. We'll take a look at all the US dollar crosses and more. Any questions or trade setups, feel free to throw them on the message board. We'll be getting started in just a moment. All right, great to see everyone here this morning. Ashish, Daniel, Frank, James, Yana, Ken, Marco, Paco. Won't get to everyone, but great to see you guys this morning. Hey, Victor. So here's what the DXY looks like as we start off the session here. We're trading just below that resistance zone that we talked about yesterday. You have the 200-day moving average. Basically, we snapped that yesterday at 98.53. Just above 98.68 is the 38.2 retracement of the year-to-date range and the August high day close and the May low, right? A major pivot zone that we've been watching for quite some time right here. So, we're still trading right below that 200-day moving average. We're still in this downtrend off of the March highs, but the potential for a little bit of a recovery, as we noted on Monday, still remains, right? So 98.69 still going to be the major resistance. Bearish invalidation still remains with last week's high. It gives you 99.18. A break above that is what the bulls would really need to reassert the long side. So just a more significant low is in place. A larger trend reversal is underway. But all things held constant, we're just trading right below resistance. Euro dollar similarly trading right above support. I did shoot a piece for this on Forex StoneX TV, which will be out later today. But here's the setup. We pulled back from a major resistance. We talked about that and documented it at length. 1826, 1813, the 1618 off the low, the 618 off the high. Beautiful, beautiful region. That's also the 618 extension or the 618 retracement of the pitchfork. So really nice region, getting some kickback here. Now, there's still some downside potential here, but the key support is 1667 into 1681. Okay. That's going to be that swing high from March. That's going to be a 38.2 from the March low and the 200-day moving average. All of that converge on basic trendline support. This pitchfork you see here in blue, guys, all I did was match this basic trend line. That's it. So the same gradient giving us some really nice levels on the upside. Here's confluence support for euro dollar, 1667, 1681 key support. We're straddling the yearly open here. I just want to note that 1745, right? So again, despite on the DXY at least a 5% range for the year, we're unchanged. So here's euro dollar straddling the yearly open. Resistance, critical resistance remains unchanged. That's 1813, 1826. Looking for a potential test of that upslope in the days and hours ahead. But losses should be limited to 1667 if euro is heading higher on this stretch. As always, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals. Here's the British pound. Tight weekly opening range. The one thing I like about the British pound is that the weekly opening range is at a major level. So the range lows for the week, here's the Monday candle, is right here at this major pivot zone that we've been tracking for months. It's the objective yearly open. It's the February low day close, was last month's opening range highs. It's all right here. And so the weekly opening range, if you look at the 4-hour chart, is taking shape and is preserved right above support, right? So 34.64, 34.74, that's key support near term. A break below that. As we said earlier in the week, nothing changes on sterling, by the way. If sterling is heading higher on this stretch, I would want to see losses limited to the 200-day moving average. That comes in near 34.12 right now. The 38-2 retracement of the rally is 34.30. So this 12, 15 pip zone of support is really what's critical if sterling's heading higher. You have a weekly opening range preserved right over support. Need a breach above 35, essentially 36, 35.98, 35.94 to validate resumption of the uptrend in the British pound. We did get some data earlier today from sterling. Here's what the data look like. You got some consumer price index coming in at 3.1%, slightly better than expected across the board. Month on month, a little bit hotter. I didn't see much of a reaction from the sterling, but we still do have PMI figures out of the UK and the US tomorrow. And that's going to pretty much wrap up the event risk into the close of the week. So do keep that in mind. All right. That is British pound. Next up, Aussie dollar. Also very tight. Weekly opening range. In Aussie's case, it's right below resistance. Remember, 72 is massively important. That is a huge fib confluence at 72.08 to 72.13. We tagged that last week. We pulled right back. The weekly opening range taking shape here, right above near-term support. 71.36 is going to be the 2022 August swing high. Caught the highs again in 2023. That's a really nice pivot zone. So here's the 4-hour chart. We're looking for a breakout of the weekly opening range. It's Wednesday. Key resistance is overhead at 72. Initial support at 71.36. If we break to the downside, the levels that we cited earlier in the week are the same. So 70.74 and 70.27, both levels of interest for possible downside exhaustion if reached. 70.27 specifically being near-term bullish invalidation. So if we break below this level, it would suggest a more significant high is in place and the potential for a larger setback in the Aussie. Topside break above 72, there's nothing until 73 essentially. 73.07 to 72.95 is the 2019 high and the 618 extension. That's your next major lateral upside target if this breaks higher. But all things held constant, Aussie dollar trading right below resistance at 7,200. Okay, and dollar CAD. So I also did a piece on this earlier today as well. Here's the dollar CAD trade. It is a very much similar to Aussie dollar and sterling in that the weekly opening range is preserved. Here's your Monday, Tuesday stretch. Really, the Monday candle is the weekly opening range. But a couple of things to note on this. Obviously, we talked about this major pivot for months. The break there last week really solidified, at least near term, to continue favoring downside bias. I'm looking for a potential low in price. Two levels to keep in mind, okay? First one, let me take you to the weekly chart. First one is right there at 36.17, okay? That's the objective yearly low week close. And it converges on uptrend support for this pitchfork, the objective low, high, low from last year and this year. And it converges on that basic 2023 uptrend. So that's kind of the first level of support. The second level of support is just a bit lower. You have the 786 retracement of the advance off the lows of the year. Either one of these levels could charge a little bit larger of inflection, meaning if broken, accelerated drop, if defended, sort of a larger reaction like we got here and like we got here over the last 2 months. So drill down deeper. Here's the 4-hour chart. Really tight channel on the descent here. Here's 36.17, just lower. Here's 35.85. Looking for a potential reaction off one of those two levels if reached. Initial resistance is at the weekly open. That's 36.94. Okay, we're straddling that 618 retracement since the start of the week. But resistance is 36.94. Okay, and you would need eventually to get above 37.33 to suggest that a more significant low is in place and a larger reversal in trend is underway. So a little bit more hairy here on dollar CAD. Still has the potential for another strike at that slope support, maybe the low day close, but essentially that decline, which has extended more than what? I want to say 4 point something. No, wrong. 2.4% off the high. Maybe get a little bit of a breather here near term, but we're looking for a reaction down here in dollar CAD. Keep in mind next week we do have the Fed rate decision and the Bank of Canada rate decision both on Wednesday. So you get a double whammy sort of event risk report next week. Maybe we'll have a larger catalyst here for dollar CAD. Questions on Loonie? All right, making good time today. Dollar yen, not a darn thing has changed. We did try to push higher We tried to break the upside of that multi-week consolidation formation. Doesn't look like it's trying to make any headway here. So for dollar yen, nothing changes. We're still in a consolidation. The monthly opening range is preserved. We're looking for a breakout near term in dollar yen over the next couple of days. Key resistance is still 160.21 to 160.73. Key support still 57.33 into 57.70. Just can't get excited about it no matter what I do. This dollar yen trade is just yuck. Okay. Last but not least, really quick look at Swissy. You know, we're testing resistance right now. This is the same level we opened up the week at. I was telling you guys to look at. That's the 2025 objective swing low at 78.29. We pulled back from that. We still didn't get a clip of that 618 retracement of the yearly range of the January advance, whatever you want to call it, 77.72. We still haven't gotten that test. Maybe we don't get it. I don't know. But I did want to highlight that we're basically now in sum total a very nice weekly opening range preserved on Wednesday. Let's see if we can't get the breakout here over the next couple of days to get us some directional guidance, but still trading right above that 618. Okay, that's everything on the FX front. Do let me know if you guys have any other questions. It's a quiet morning, especially on the FX front, but the longer the lull lasts, the bigger the moves will be once we finally break out. Here's gold. Just wanted to highlight that near-term slope that we were tracking since the beginning of the week, it looks like it just broke and was tested as resistance. I don't know. It's only a 2-point slope. Remember, any 2 points can make a trend line, so I'm not stressing this. But it is interesting that the initial support that we had highlighted at the April open at 46.68 was the exact low yesterday. Literally 46.68. So the levels are good. Remember, all things held constant, gold is trading right below major resistance. 48.55, 49.10 since the start of the month. That has been critical resistance. My favorite fib confluences, that is key. Here's a test of the monthly open that we made yesterday. Potential still for some kickback here, right? Bullish invalidation, at least on the near term, is still 45.40 into 45.33. Key resistance, topside break, you're looking for 50.25, you're looking for 51.33. So not out of the woods yet here on gold. Oil is trading at resistance right now. So 90.79 to 91.78, the level of support that we were talking about for the last 2 weeks, which broke last week, has been resistance since Monday, still is. Okay, still is. If we pop through this, okay, it would suggest near term a little bit more of a lift. Dan saying Australian PMI numbers drop tonight. Maybe a catalyst to break out of the current range. Could be. Could be. What are those PMI numbers supposed to look like? Oh, we don't have that as a high. Yeah, I doubt that it's going to be a major market mover. We have it as a moderate volatility, don't we? Wednesday. Yeah, here are the PMI numbers. Yeah, it's a moderate volatility print. Don't necessarily think it'll be, Dan, the catalyst you're looking for. I'm looking for a catalyst too. Don't get me wrong. I don't know if these PMI figures will do it, but something to keep an eye on. Absolutely tonight. So yeah, oil's at resistance right now. Watch for a reaction here. There has been some more ships that have been fired on overnight that I got a hint of earlier today as I was scanning the headlines. It looks like there is a lot of dissension amid the Iranian leadership with regards to whether it's the IRGC or whether it's the perceived leadership that we're negotiating with. There seems to be some disagreement there, and I think President Trump is trying to give them the opportunity to come up with, like he said, a unified proposal. I don't think the administration wants to leave this ceasefire as open-ended for a prolonged period of time. That doesn't help the case. Remember, this is sheerly a timing thing. Iran is basically putting a stipulation that they want the blockade on the strait removed for peace talks to proceed. The closure of the strait and the blockade is one of the reasons that we've brought them to the table. So this is a finely delegated, choreographed dance here. We'll see what happens in the days ahead. all things held constant, oil's still, pretty much still below that 101 level that we talked about, 101, 101.50. That's still the danger zone as far as I'm concerned. And we'll see if we're able to keep this resistance here. But if we pop through that 91.78 level, you're going to be checking downtrend resistance, and there is a potential for a little bit more of a flutter higher. But I would think you'd need a catalyst for something like that to happen. So we'll keep an eye on the oil prices over the next couple of days. So that's gold and oil. The last thing I did want to cover with you guys is Bitcoin. Looks like we're getting the breakout. So 76,159 to 74,434 level we've been talking about for months, since back here in February. That's been the hurdle and the major resistance zone. We did mark a daily close above it on Friday, but the weekly candle closed right back below. So here's the secondary push and another attempt to try to break the top side on the weekly chart here for Bitcoin. All things held constant, it does look pretty decent on this run. Momentum looks pretty good as well. So a little bit higher, you have the 2025 low day close. That gives you 79,127. Then beyond that, the 100% extension off the low, 2 equal legs off the lows of the year, gives you 81,000. I'd be looking for a larger reaction there if reached on Bitcoin. But it looks like we are trying to make a confirmed break here, at least of that multi-month downtrend. We'll cover this again tomorrow. The close of the week is going to matter, but this is the biggest stretch that we've seen so far. And it's interesting because I was talking to someone else about this yesterday, one of my colleagues. Bitcoin has been shifting more lately towards a risk trade. So as equities have been rallying, Bitcoin has been rallying. Equities are all-time highs, and we've broken resistance on a lot of the indices. Here's resistance break here. As long as the risk sentiment stays buoyed, I do think this has the potential to see some climb here. If there's a big reversal in risk trends or things in the Middle East deteriorate, you get some bad headlines coming out, dollar starts to mount a larger recovery, maybe it'll curve the top side, but all things held constant, while above 76,159, I do want to treat this as potentially a breakout here near term. All right. Okay, we made good time today. Any questions or trade setups you guys want to review, do feel free to throw it on the message board. Otherwise, we'll go ahead and wrap it up here. A quick look, just really quick, at the S&P 500. Just wanted to show you guys that level still remains. We talked about it yesterday at 71.28. That's still resistance. This is a fourth consecutive day of trying to breach that resistance zone. So watch this very closely, especially into the close of the week. We'll look at it again tomorrow. Again, we do get some PMI figures out of the U.S. Tomorrow as well. Don't expect it to be a major market mover, but could be a catalyst to offer some sort of gyration here. All right, no other questions. We'll go ahead and wrap it up here. Thank you again, as always, for carving out a little piece of your morning. We'll see you tomorrow morning. Best of luck trading. Till then. Oh, I'm sorry, Mesfin. I missed your comment. Sorry coming in late. Euro yen. You want to take a look at euro yen again? Yeah, we did that yesterday, right? So was it euro yen yesterday? It might have been a different pair. I don't see. Let me take a look again here. Yeah, so Mesfin, nothing changes on this. I think from the last time that we talked, that 86.55 level, you're still sort of glued right there. This is a third consecutive week where price is glued at that, and you're trying to break the yearly opening range highs here, which is my concern. Here's your yearly open marker right here, right? So this is your yearly opening range highs. This is a 1618 extension from the breakout of that zone that you saw, that multi-month consolidation into the start of 2025, which finally broke out. We're sitting there right now. So with some ongoing divergence, yeah, you're in an uptrend, but the uptrend looks a little tired. Here's the daily chart. Here's the breakout that you got of the monthly open, right? Pushing higher. I would say on a trade like this, I think we did cover this yesterday, right, Mesfin? Yeah. Trade like this, look for a break of that Friday candle range. That's my go-to move on a move like this. Look for a breakout of this range to offer guidance. Topside breach looks for a resumption of the uptrend, but near term, that near-term rally might be a little vulnerable. Okay. If we break 86.18, which is going to be, just those swing highs there, you're looking for 85.22. That's a basic 38.2 retracement, converges on the 25% parallel. Bullish invalidation is down to 83.55. So you got some room before that hits. And then near term, you got a 1618 here off the low at 188.26. That's your breakout zone. So those are the levels I'd be looking at near term, but nothing's really changed since the start of the week. You're in an uptrend. Uptrend still looks a little tired, but nothing changes. Make sense? All right, Messman. We'll go ahead and wrap it up here, guys. I'll see you guys tomorrow morning. Best of luck trading. God bless.